Wall Street gave up a huge rally Tuesday as investors questioned if market sentiment had swung too quickly from being pessimistic to optimistic. The Dow gave up a 900-point rally to close with a loss. The S&P 500 and the Nasdaq gave up all their gains as well. Nick Colas of Data Trek Research says the jury is still out on whether the bear market low set in March was truly the bottom.
The history is extremely clear about how market bottoms occur. However, what may be different, or at least helpful this time, is policymakers were so aggressive right after the crisis hit, both from the monetary and fiscal side. And we're not waiting for months and months and months like we did in 2008 and 2009. If you listen to bullish commentators, they'll say we've had enough stimulus to cut off that usual pattern of having to find a low after the initial drop. And that's the conversation the market's going to have now.
And there may be more stimulus coming. Treasury Secretary Steve Mnuchin tweeted that Congress and the White House are working on $250 billion in additional help for small businesses forced to close or lay off workers. Individual stocks on the move. ExxonMobil announced it will slash spending by 30% this year after business was hit by the double whammy of a plunge in oil prices and weak demand. But the money-saving measures didn't include plans to cut the billions in dividends paid out to investors. Exxon shares rallied 2%. Oil prices tumbled on Tuesday after the U.S. Department of Energy hinted it would not adhere to any production cut agreement at a meeting later this week by OPEC and its allies. Both Saudi Arabia and Russia said they would only agree to deep cuts to their output if the U.S. agreed to cut as well. A price war in the midst of a global glut in supplies has led to a crash in global oil prices.